Dude, yeah, you were the first one here, and then I hadn't even tagged premium.
Completely like pure by luck. I just happened to get down at the computer, look, and the link was posted.
Welcome, welcome. How's everybody doing? Hope y'all had a good day today. You had your biggest gainer day ever today? Dude, that's epic. I would say that's a really good day. Like percent or dollar. Doesn't matter. Both sick no matter which one. This thing was on a heater, dude. Yeah, explosion. This one just haunts me, dude. And never get it right. Yeah, I bet. That was a nice one. I mean, nice week. A little 43.5% ripper. 4 days. No big deal. This one too, dude. Haunting us, dude. We could have had this baby down here at 90. Yeah, the MDX is haunts me. That's one I actually like too, and I'm not even in there, you know? I hit it one time, but that's it. Welcome, welcome everybody. How we doing? Got a feeling Archon's not gonna have one of those things. Yeah. Dude, honestly, on that news or not news, but on AES, I wanted to buy that dip yesterday and it went on the ripper because somebody, you can see it right here, dumped them 3.4 million shares, 3.7 million shares right there. I think the order was actually like 3.2 or 3.3 million. Um, and there's something about that that's got me wondering if that buyout's going to come through. So I wanted to buy that dip bad. And then today I regretted not, you know. Welcome, welcome everybody. How we doing? We'll give it a few more minutes here. Hope y'all had a great day. Did any of you guys have trouble with the link? No, no. 1K just asking if I was. Overall, yeah, did. Sick fun. Aqua took a dumper, huh? After hours, so I guess I haven't looked at it. Wonder what's up with that. Did it have earnings or something, or what went on there? Just a dumper after hours. Yeah, that thing went insane now. What a move. 94 to 114 back to 102. Like that is just, whew, whew. Oh yeah, snow. Yeah, I know. I'm bullish on snow too. I haven't gone back and read that report, but they didn't like it. We get 230 though, so they'll probably come back and help me. Let's slap a circle. This is where I want to buy snow. I didn't, but see if that one will haunt me in the end. Link worked fine, good, good. Snow started making money. Doesn't look like it. Other upside fell short for Q2. Third quarter results disappoint after big second quarter beat. Growth deceleration. So what the headlines aren't like amazing. Snowflake stock slides after Q3 beat. Couple price target raises. Few of them. Wells Fargo, even. Yeah, yeah, God. I'll tell you what, they just aren't loving tech right now. They're liking everything else. Is Nvidia gonna go down? Oh, Avenger. I don't know if Snow's a no-brainer. To be honest, I don't know enough about the company. Like Meta, no-brainer. No-brainer. That thing got clobbered on something that I didn't, most people included, and myself included, didn't understand. Meta was the no-brainer. Um, this one, I don't know enough about to say if it's the no-brainer, but technically, you hammer it right here, technically speaking, you got to be adding shares anywhere in this 225, 235 zone, at least for the try. It might end up, wedging out on you even lower, but still a good spot to try. Oh, Oklo started making money? How? They don't have a product. No, they did. They did an offering after hours. That's funny. It's funny. Man, UBS on the upgrade from 95 from 65, that's big. I don't see anything about them like making money though. I don't know how they could make money when they don't sell anything. Okay, give me one more second. I'm gonna make one more post and we will get to rolling. So, yeah. I think you should be able to talk 1K. I'm not sure. Says your co-host. Okay, welcome everybody. Happy to have you here, Dirty River. We were just yapping about some things. But so tonight, a little bit different of a class. Uh, we just had a couple of classes run a little bit long, and so we didn't get to cover a couple of things that I have wanted to touch on with all of you. And so that's what we're going to start our class with tonight. And then for, I mean, hopefully the last 30, 40 minutes, gonna do a little Q&A with 1K. We had the group lecture with a few of us last week or 2 weeks ago. I don't remember when it was. And like I said, me and Shark were just yapping away. Toasty hardly got to talk. 1K didn't get to talk. And so I wanted to make sure we get 1K on the mic. Like I said in my post, one of my favorite traders in here, a person I've really watched to grow as a trader, and become, I mean, a more cool, calm, and calculated trader than myself. He knows his plans. He sticks to his plans. He trades what he knows. I say it all the time. He's the most underrated person in here. I think if you aren't at least looking at his tab, you are seriously missing out. You should probably be taking his trades too. He's on that same mindset as me of, super low risk, high reward. That's what we look for. We're dip buyers. We aren't, the people chasing the big movers. We're never going to be those people. But consistency, and that's what it's all about. And I think 1K really does that well. So like I said, that'll be, second half of the class. And then in the beginning, like I said, just kind of some housekeeping, basically. One thing that I wanted to talk about, and this is something that thinking back, I've done, a lot of lectures in OOT since I've been here, literally hundreds. And something that I've never really discussed, even though it's something that I use all the time. And so you guys know that I do, for the most part, all of my charting on the daily time frame. I want to know the big areas of interest. I want to know, hey, where do we look to buy dips? Where do we look to short rips? Where are places where I can start to feel comfortable doing any of those things? And I think all of that information is always going to come from the daily time frame. It's going to give you just the most information. And I've always taught about, charting on these things or charting on the few indicators that I use on the daily time frame, how we can kind of analyze these charts, how we can look to buy dips, things like that. But I realized, after all these years that I've always left out a really important part of all of this. And so it's something that I've never taught it. The only reason I really kind of started thinking about it is I've been like getting some questions lately that made me think and made me say like, well, why is that happening? And so, one of the main things that I want to talk about today, and we'll just use SPY, whatever, who cares? Doesn't matter. This, as always, I don't care if you're looking at, SPY or QQQ or Apple or any of them. You chart them all the same. But so what what is this big aspect that I've been missing on the daily time frame? And so you guys know that I use the opening range a lot. It's something that I like to use to build my bias. It can oftentimes really provide you a nice place to buy the dip. The double bottom or double top on the opening range, and I don't use the orb one, the 15-minute one or whatever people talk about these days. I use Albrook's good old fashioned first 18 candles of the day, first hour and a half of the day. That's the opening range that I like. It's telling me that you have a very, very high percentage that high of day or low of day has been set. And so it just gives you a nice little statistic to trade around. Well, something that people bring up to me all the time is, oh, well, I tried this on the opening range and I keep trying it and it never works for me. And this is just one example. This can be, of course, applied to everything. I'm just using something that I teach. So, something that people have been saying to me, I don't want to say a lot, but just some over the last year or so, is that they're trying these opening range breakdowns, and that it breaks down, then it retests, so you're kind of looking as that break and retest, and then it just never works for them. And part of that is, at least in my opinion, you guys know most breakdowns fail, breakouts fail, 80% of breakouts fail. So I think part of it is just that. But then I really started to think about it a little bit deeper and, why, I haven't been taking a lot of those trades this year. And so the thing that I wanted to talk about tonight with our daily time frames is market context. And so this is going to be a little like an interesting thing because, I'm going to be talking about these things I love and how these things, parts of these things that I love are actually not working as good because of the current market that we're in. So, what is market context? In simplest forms, and this is like, you guys know I love to keep things super simple. I'm sure many of you guys have heard me use like a reference or something similar to this. So, what is market context? We look at the market and we say, what is the context of the market? Well, we're in a bull market. And so, what does that mean? Stocks are going up and to the right. That's how we know we're in a bull market. In simplest forms, the stock is going up and it is going to the right. Things that are in bear markets, obviously going down and to the right. So that is the very big picture market context. Is there times where, you can get absolutely blown out trying to use it? Absolutely. But so how does this apply to our trading? And this was the thing that I really wanted to teach. When we are in a bull market, and again, I'm going to use things, my examples tonight are going to be things that I use and I teach and I talk about. So when we are in a bull market, we know stocks are going up and to the right. We know for the most part, we want to be dip buyers. Don't in a bull market, don't try to be the hero shorting the top. In a bear market, don't try to be the hero buying the bottom. Nobody cares about that. What we need to do is say, okay, market for the most part is going up and to the right. We know dip buyers have been rewarded, blah, blah, blah. Those are the types of trades that we now want to look for. And so, how does this matter to us? Well, we can actually use today as a really great example. You know, double bottoms are holding very well. They are giving nice bounces. Triple bottoms are giving nice bounces. That is because we're in a bull market. On the other side of that, double tops are only working okay. And so that's something that we always want to think about in this market. We don't, and I, of course, encourage you to not use any sort of patterns, but we do not want to, we do not want to, um, build bias unnecessarily. That's why I don't trade bull flags or any of that nonsense. I trade a double bottom. And why does a double bottom work? If there was buyers there once, chances are there's going to be buyers there a second time. It's that simple. Well, when we're in a bull market and we take the context into account, we need to be looking for double bottoms to hold. We need to be expecting breakdowns to not hold. So in those situations where, we get the breakdown, we get the retest, I'm not going in a bull market. I am not going to be too inclined to short this because I'm going to assume that, the market wants to go up and to the right. Or like Crash's picture wants to go around, it wants to pull the moon on you. You know, I'm not going to be super inclined to take this short right here. Is there days where it's worked great and everything? Of course, but we're in a bull market. So I am always going to be looking for more setups like this, wedge bottoms, double bottoms, those types of things are the things I want to look for. Then on the other side, we can use a trade that me and 1K actually took yesterday. I think actually a couple people hit them with us. So IWM, it's obviously put in some nice moves since then. If we go to this longer time frame chart here, so IWM yesterday, top, top, top. All of this makes sense. You should be short. You shouldn't be long. And so ultimately, that's what we did. This is around where those tops were. So we took this little short down. Maybe it was this one. I don't even remember which one it was. And then we were in the voice chat and somebody said to me, well, we're setting another double top. Do you like it? And I tell them no, because double tops are not holding as well because we're in a bull market. Things want to go up. So the whole gist that I'm trying to make here is when we are analyzing market context, and market context tells us, for the most part, everything is in a bear or a bull market right now. We want to look for more bullish trades. I'm not telling you to buy calls at triple tops. You should never. You should wait for pullbacks to obvious supports and then look for continued moves to the upside. Those are the types of trades we want to look for. We want to go hunting a little bit less for double tops. And we want to go hunting a little bit more for double bottoms. Because of where we are, we know that those are likely going to give us the best risk reward. And then again, for anybody who was trading with me yesterday, we'll all get it wrong sometimes. Funny enough, I traded calls I traded puts on 5 separate occasions yesterday. You guys can see I like to short trend lines. So I traded puts on 5 separate occasions yesterday. I bought calls right here. This is my one long trade of the day. Because I waited for, and well, we did catch this nice sell here, but I waited for a pullback to buy. And I never got a deep enough pullback to buy. So you guys all know I don't trade great on days like this just because, these slow grind up or down, I don't care. I don't like that kind of trading. I want volatility. I want some dips to buy. I want some rips to short. And so I don't trade great on days like this. So even though we know market context and I know market context, I'm sitting here teaching you guys about it that, we know stocks want to go up and to the right. We can still just be completely wrong sometimes and try to fight the market. Happens to everybody. It's just part of it. And so, you know, big gist of all of this, just to move on. Like I said, we're in a bull market. We should be looking for bullish dips to buy. I'm not telling you buy every single red candle of the day, but let the market set up to give you the dip to buy and sit and wait for it. We were in voice chat this morning. I remember we missed this one and we were all super disappointed. And then we missed this double bottom too. Well, it'll come back. You'll get another trade. It doesn't matter. But we know those are the trades we want to look for. Don't get me wrong, Marco's making it pretty obvious where you wanted to be at the very least scalping short today, and where really you would want to be scalping long today. And so, really, really, like, really, nice defined trading. Obviously, you can be short or you can be long. But as a whole, we're in a bull market. Basically, everything we're trading is in a bull market. So we want to take that market context into account and trade accordingly. And we should feel, safer long than we should short. So does everybody get that? I know it's kind of a lot of talking and just using how I trade as examples, but does everybody get what I'm saying here? Don't fight the market is the moral of the story. Dang, we got Manny in here. Sick. Oh yeah, the C breakout yesterday was sick. Yeah, see, that's like another one. This is a good trade. We know the breakout spot. We know the target. Risky buying up there, and never gives me a pullback. This is the type of trade that for me personally, I'll never catch. Had I caught it, back here holding our 102 zone, great. Or even 95. That's where I really wanted to buy this thing, or 97, something like that. Great. But then at this point, I can't trade this thing. I have a very strict rule. If it feels like you're chasing, you are. And so don't take the trade. Okay, so does everybody get that? We're all good there. I didn't see anybody respond to it. So does everybody get what I'm saying? Don't fight the market. Stop sticking and stuff. Dude. The OG crash, the other crash is he had one of the greatest quotes ever, stop loss at zero, because that's where the loss stops. Okay, so with that, great, we're good there. So the next thing we're going to talk about is risk reward. I get asked about this all the time. I got asked about it on Trade Floor today, which is what reminded me, or I don't know if I asked about it, but I responded to a question about it. So that's what reminded me that I wanted to talk about this because I get asked about it all the time. And so it's easy. Some of these new, like the YouTube Furu guys, like really proud of themselves and stuff, those type of people. They make it like this, like, mind twisting, blah, blah, blah. You need all these indicators to help you like analyze your risk reward. You don't. It's very simple. So we're going to talk a little bit about how I analyze risk reward in my simple method, and then how we can get a little bit deeper. And if you really want to dig down on some of your things. So let me think of like what's something that doesn't move like a lot in the after hours? SoFi. Okay, did SoFi have earnings? That was a terrible example to pull up. No. Wow, why is SoFi crushed? Oh, nice. A little offering. Dropped a little offering. Okay, what's another thing? Yeah, well, that's a massive one. What's another one? DraftKings, that thing don't move. Yeah, okay, so DraftKings. Oh, this is actually a pretty sweet example. Okay, so we got DraftKings right here. We can pull it up on the daily time frame. Obviously, been strong. This is a nice one. So say we're looking to be dip buyers on this trade, and we want to put on a long trade, put on a swing trade. As I'm looking at this, I'm so disappointed I didn't put on a swing trade. So we want to trade DraftKings. Well, how do I analyze risk reward? So and we're gonna, I'm not gonna say this is necessarily a trade that I would take. But we're gonna just use it as an example. It's honestly halfway decent. So DraftKings, we know 3440 is big for us. So we take the break, we see the consolidation, we see it holding EMAs, blah, blah, blah. Who cares about all of that? So we take our entry. Well, as we know, with any trade that we take, we need to know three things before we enter. We need to know our entry, we need to know our stop out, and we need to know where we want to take some trims, our take profit, our ultimate take profit. So we have DraftKings right here. We know 3440 is our entry. We're just going to use the next level up that I have. It's 3510. So we got a 70-cent move up. Well, down here, we're entering around our 3440. We know our stop is now going to be basically under 34. So just do that math. Do that math, very, very quickly. You can even round a little bit. You can call this 80 cents to make it easy, 40 cents down, 80 cents up. That is how you should analyze risk reward. You should keep it that simple. We know that our risk on this trade is a break of low a day. It's 40 cents down or whatever it is. We know that our ultimate target on this trade is going to be up here 35.10. So that is how we analyze risk reward. Keep it that simple. Make sure that your trades are actually offering you good risk reward. I talk about people who hold trades for too long all the time. There is, if you are in a trade and it goes minus 50, 60, 70%, and then it comes back and you make money on it, it's not a good trade. Like you got saved. You obviously did not have a good entry. You didn't have a good plan. You should never find yourself in that situation because when you start thinking about it, you know, if you go minus 80% in the trade, say that you make 20% on the other end of it. That means you had a 4 risk, 1 reward trade. You will not last in the market if that is what all of your trades are doing. I 100% guarantee you. We want to minimize our risk as much as possible and maximize our reward as much as possible. A really good starting place, and you aren't always going to get there, is going to be 1 risk, 2 reward. Because in this situation, if you get stopped out, and then you take another trade, same position size, as you should always be trading same position size. If you get stopped out, you take your 20% loss. Well, now you take another trade, 1 risk, 2 reward. Well, this one works for you, and you get your 40% gain. You have now covered your 20% loss and made 20% profit on that trade. So that is how people need to be thinking in risk reward. And risk reward is the best example to show you why you always need to be position sizing the same. And when we say that, position sizes should be thought of in dollar amounts. I trade $250 on 0 DTE spies. That's what that's an example of what you can trade. It should never be I trade 10 contracts because that is not real, that's not a position size. 10 same-day spies might cost you $500. 10 weekly Teslas might cost you 7,000. That is not good position sizing. You need to think of position sizing in dollar amounts, and then you need to think of return on investments in percents. Yeah, except if you're Manny. Then you need to think in percents on your returns, because it is total return on the whole position. That's, people get confused why, we'll sit in voice chat and scout spy for 15 or $20. Well, it's 30 or 40% returns. People are stoked on 30% return on a swing trade, but there's something about a SPY same day that they don't understand that they're like, oh, well, yeah, 30, oh, you only made $8, like the Norvin special. It's like, well, yes, but I made $8 from $16. I'm up 50%. So if you're happy with 50% on a swing trade or 30% on a swing trade, why would you not be happy with it on a scalp? That happens in minutes. So that's how I plan everything. So we're just gonna, that's the simple cut and dry. You look at the chart, 40 cents down, 80 cents up. That's what I'm looking for. Well, if you want to know how much you are risking, that is where, yeah. So if you want to know how much you're risking, that is where option Greeks have to come into play. So here we go. I pulled up DraftKings randoms, 36 calls, oh, because it's 35 and after hours. Well, okay, so 36 calls. I'll use it for the sake of the example. So when we have these 36 calls, we see that we have 39 delta on them, okay? And I just went for the next week contracts just to make the math a little bit easier. So we see that we have 39 delta on them. So we know that on this downside, we're risking 40 cents. That is 40% of 1 delta. We are risking $15 per contract. Okay, does everybody get that side of it? Hope so. Now we are looking for 80 cents up. So we have $39. We're looking for 80 cents up. That's 80% of one delta. We are we are looking to make $31. So we're risking basically 15 to make basically 30. Um, that's a one risk two reward trade. Of course, you'll make a little bit more because there's more Greeks going on than that. But if you want to know how much you are actually risking, every delta is based on $1 on the stock. So if you have a $1 wide stop, you're risking $39. If you have a $1 up profit target, you're making $39. So that is how you understand your actual risk reward. Yeah, they're cracking me up. Uh, how do you plan a swing trade? It's simple. You buy the dip. You don't go chasing the high flyers. Oh, look, we got Viral responding to you. Okay, so IBM. We talked this one in my lecture over and over and over and over again. Where do we want to buy IBM? We were talking it on the way down. Where do we want to buy it? 230, 240. This is how you plan a swing trade. Like this is the ultimate swing trade. You've sold down to your nice strong support. You've held it for a few days. You take your entry here. Your stop is below these lows. You got $8 of risk. You're at least looking for the move up to the highs. You get $20 upside. It's that simple. Or I mean, we did one. This was Shark. Here's Shark's swing trade. We know the zone where you want to be a buyer. 275 to 3. This is where you buy. You target 360 to 390. This was Shark Swing Trade on RR, you know. You keep it that simple. Don't be the people chasing the high flyers. Don't be the person trying to swing calls on the things that are running. Like, we've all seen these growth stocks that are just getting hammered. Pull up your dailies, pull up your weekly time frames, look for sells down to strong places, and look to buy them. One that I'm looking into, and I might be unnecessarily bullish on Amazon. I messed it up today. I want to be long Amazon off this 25, no denying strong downtrend. We've had a lot of tries on it. We're coming into very strong support. I probably should have not been in weeklies and I should have been in next week's and just stuck with this trade. But there's a nice sell down, good bounce up. For now, high or low, at strong support. So you swing on it. Okay, so with that, everybody get it? Risk reward analyzing, piece of cake, piece of cake. Use the chart at first. Say how many dollars down am I risking and how many dollars up am I making? If you aren't looking to make double what you're risking, don't do it. Um, well, how do you set stops on swings? That's why I don't recommend swing trading because you're living on hopes and dreams for what is it? About 17 hours a day. You're just riding on hopes and dreams, hoping that position's going to be okay, and you don't get wrecked you don't get wrecked overnight. Okay, so any more questions there? Everybody get it? What are the charts on my line? Support and resistance. What do you mean? Oh, well, the dark blues, I guess, those are opening range. And then we got hourly 20, 50 EMA and VWAP. Those are the only real indicators I use personally. Well, if we don't have any questions, no concerns, no, everybody gets risk reward. Well, yeah, but see, Josh, I think that's wrong because having a ton of time on a trade is the worst possible reason you could swing it. If you're wrong, you're wrong. Get out of the trade and move on. That's what I'm saying. If all your trades are getting torched for a month, what a terrible risk reward. What terrible, like your money is hurting, your time is hurting. It's just, oh, we have time. You know, like that is the worst reason you can ever swing a trade. You only swing a trade because your trade plan is intact. The second your trade plan is done, you get out of it. I mean, one that I can just use as an example because I know so many people are like deep in this thing because they were buying these highs thinking double tops don't work. This is the only place you should be looking to buy EOSE. $12.60. If you're buying any higher than this, you are chasing a volatile mover. We're this thing's putting in a 30% move in 2 days and people are red on the trade. That tells you that trade had a very bad entry and a very bad plan. If you were buying up here at your 18, you're stopping. on that daily close under 18. You should be. And then the next one's closing under 17, 16. At a certain point, you admit you're wrong, you know? So you only swing when the trade plan is intact. That's like I can talk about a shark trade because Shark's my good buddy, you know? We agreed. Him and I, we all talked. This 1170 12 range, it is worth the buy on Mara. The second we got under there, I said to him, we're going to 970. Oh yeah, I get what you're saying there, Josh, you know, yeah. So, you know, I said we're going to 970. So again, 970 is your buy. Big old massive daily double bottle. I didn't, don't get me wrong, super disappointed in myself. I did not buy. But you know where your next buy is. And that's what Shark told everybody. You start small, you leave room because he knew 970 is not out of the question. If we would have got under 970, that trade would have been stopped out of. But his trade plan was intact. It is interesting to think that it's like, a $3 move, which is big, 30% or whatever, But with how volatile these things are, sometimes that's the way it goes. So trade plan intact, fine. And the trade plan was given before the trade. This thing, like that everybody's on, like they were in it over here. And then they kept holding through weeks of crushed. This rip got you break even. That tells you the issues with the entries going on here. And then you ride it all the way back down. Like, this is an example of what not, how me or Shark or anybody else that swing trades would not swing trade. But we would all buy down here. And I mentioned this one haunts me. Don't get me wrong. You guys can see where I wanted to buy. I just pulled my chart up. And you can see where I wanted to buy, and it's up 27% from there. Yeah, but Josh, you are right. Just to circle back on that. The advantage to buying a lot of time on a swing trade, though expensive, your percent loss will be smaller. Dollars amount will be large, but percent will be smaller. Yeah, exactly. You sit and you wait patiently. What I always try to teach people is that 90% of being a trader, at least a good trader, is doing absolutely nothing. Don't be that person with 12 different swings in your port that you're just trying to scalp every day to just, make a little bit of money back because all your swings are so red. Get if you can find a good swing a week and one day trade a day, you're off to the races. That's all you need. You don't even need one day trade a day, I mean, you find yourself one good swing, few good day trades throughout the week. That's all you need. I know that I'm a terrible example of that, alerting 100 trades a month or whatever in voice chat, but you don't have to do that. Less is always more in trading. Okay, and so with that, 1K. How we doing? Are you here?
What's up,
Can you
brother?
talk? How are you?
Good, man. Just multitasking on the computer, but I'll hold off on that now that I guess I gotta do some
Yeah,
talking now. So,
yeah, you gotta do some work.
um,
Yeah,
yeah,
because
I'll let you run it, or if someone has, if it's open mic, truly open mic, someone asks a question, but I don't know, we don't really have a plan, so free flowing.
let's see.
All right, cool. I'm gonna go watch some football then.
Yeah, okay, so T Money, I see your question here. I see your question here. So you're asking about, the size. So 684 is your stop, and you're aiming to lose $100 on a $1,000 position. Well, first off, 10% stop, you're going to get tagged like 90% of the time. I know this is probably just an example, but I do want to put that disclaimer out there. So you go to this can help you decide your position sizing. Say you want to risk $100. Well, with $1,000, that's a 10% stop. You're going to get stopped out. Well, with $50 or $500, it's a 20% stop. So you can now go to your option chart and you can say, say you're buying calls at 685, your stop is 684. You can look at it and say, okay, these contracts have, 30, we'll call it 33 delta. I'm just making that up. And my stop is under 684. That means if it drops $1, I will lose $33. So my three contracts will make me lose $100. So that's your stop loss. You use the delta, add up the delta to figure out how many dollars you want to risk, and you're off to the races. But I think just trade the same size every time and always shoot to have the smallest risk possible. If you reduce risk, you increase reward. That's kind of man, yeah, man, he does in fact do that. Yeah, so if you want to swing $1,000, I mean, yes, I would buy less contracts more time if that's the plan. And then remember, always remember that Delta is Delta and it's going to be relatively universal. The difference is if you buy an at the money that's 2 weeks out, it might cost you $500. If you buy an at the money that's 2 months out, it might cost you $1,500. You're still going to make $45 if it moves $1. One of them just costs you a lot more and gets you more risk. What's the smallest time frame I used to play a zone? 5 minute. You'll never catch me below the 5 minute. And um, nobody has any business trading lower than that. If you are trading very large money and you are truly scalping futures, then you can go find yourself on the 1 or 2 minute or whatever it is. But no, 5 minute or larger. What I always recommend to people is increase time before you decrease time. If you're thinking like, I don't know what the market wants to do, go to the 15 minute. Don't go to the 1 minute or go to the hourly. And that will give you much more help. But for me, never below the 5 minute. I've met one person ever that I support him using the 1 minute because he has built his entire thing around the 1 minute. But for 99.999% of traders, it's useless. It's truly useless. Okay, 1K, you got a question?
Well, yeah, as for me, and you just keep rambling, dude.
Yeah, dude, I know.
I'm just giving you a hard
Answer the
time.
question, 1K. Are you at the bar
Yeah,
again?
I think the same thing. Going back to what was about the time frame. Yeah, I mean, you guys know my charts, or at least when I post them, it's a 5 minute on top, for my entry and exits, and the 30s on the bottom for my time or my trade plan, just to kind of show you guys. And the reason I do that, you guys, I know probably 99% of people don't pay attention, but like I tell people in DMs, I tell people in my lectures, like I want someone when I give out an idea, like I want someone to look at that chart at the bottom and go, okay, why are those as targets? And if we hit them, great. Not that we're bragging, but like, why did it go there? Does that make sense? I want people to learn because otherwise, yeah, I could just say, hey, we're taking Uber calls, sell here. But like to me, I try and just keep the education side going as much as I can. I know it kind of goes off the rails sometimes in the Discord, but like I want you guys to look at the chart and say, does it make sense? Or someone asked me, okay, we hit all three targets. Why did you pick those? That way it can be a teaching moment. But I don't know if people do it. I'm going to keep posting the charts how I do, but yeah, it's always a 5 on top and a 30-minute on the bottom for sure.
And I think that's great. Watching two time frames to me is super helpful. Like I always have the chart that I'm trading, the 5 minute up or whatever, and then I always have the hourly of whatever I'm watching up as well. And then because my daily levels are on my chart, I'm basically watching the daily time frame as well. So, a few different time frames I think is very helpful. And like 1K said, and I said, a higher time frame is better. You will get more valuable information there.
And Tilly he would teach that early on, and it just like early in my training career, I'm like, or day trading. Why am I looking at a 1 hour candle or 30-minute? But like now it makes sense when I don't have an exact example, but when you see something on the 5 and you're like, I don't know anything about this, but then you go to the 30 and you're like, well, wait a minute, look at these wicks on the bottom side showing buyers.
yeah, or
Actually, wait,
like
was it?
yesterday's a great example, of there were some pullbacks until you go to the hourly chart and everything was just green and closing at new highs and pushing to new highs. Like the hourly chart had some great information for you. This was just sort of like, oh, well, like I don't, like I could buy these dips, but it's not even like big, or I could short these rips, but it's not even big levels. And all of a sudden you kind of go to the hourly and you're like, oh, well, we got candles closing above previous highs, not breaking above those previous highs. I should probably stick long. There's a lot of information, and like you guys know, I scalp, and a bunch of my entries are because something's happening on the hourly chart.
Yep. So I see something from Avenger and then Viral Avenger. Um, Position sizing, River will probably agree. It's very tough. What I want to say and what I should say are two different things. You gotta you have to prove and like literally with the numbers and your trading journal and your port in front of you, like if you keep if your port is not growing, there's no reason to take on more size, I think is the quick answer. But I will say with time comes experience. And once you can prove to, a mentor or yourself, like I said, if you can look week after week and the port is growing, it's a different opinion. River and I had a long phone call a couple weeks ago. He's been trained for years and he can piggyback on this. He resets, I don't know, we said weekly or monthly, your portfolio, and you just trade the same size every day. He's not just like stacking year after year. Like he pulls out his profits and goes back to whatever dollar amount his port is and the same position size. And so also that takes the guesswork out of it. He knows, he buys X amount of contracts on SPY or whatever it is, and he's just locked in every single day. I increase size as I go, but I don't, you know,
But
I
like I gotta chime in here.
go ahead.
You likely aren't increasing size. You're you're still probably using, like
Oh, that's a good point. I
three,
know where you're
four,
going with this.
6%. You
Yep.
aren't, you never increase size. You
Right.
never size up. You
Yeah. So
always,
trade or
yes.
what's the term? Position sizing. Yeah. Position sizing, like,
You scalp with 2% of your port.
yes, I know what you're saying. Yeah. Yeah.
Yeah,
It's
and
never
yeah, it's never
like you
about
touched
getting
on.
big. Yeah,
Yeah.
yeah. And so that's how I teach it. And I think that's what 1K saying here too, like you never go heavy, but you say, you trade 2% on scalps. Well, maybe today your port's $1,000 and maybe next month your port's $2,000, So you're still trading your 2% or what, I'm just making up a number. You're still trading your 2%, but your 2% has naturally increased in size. You're still doing same risk reward ratios, still doing all of that, but you
Hmm.
aren't sizing up. Your size will naturally increase with time.
And one thing that really at least helps me, I don't know, I do a lot of little, maybe it's weird shit, maybe it's a light bulb moment for someone, but like my I guess you call it the P&L and the active trader on Webull. If you notice my screenshots, partially it's for me and also because it's like no one needs to know how many I'm buying, but it's like I never have the dollar amount that I'm up because that's a little psychological thing. So, if I'm buying two contracts of Uber and it's like, well, I'm down $30. So I'm like, $30 does mean something to me, but it's different than down 300 or 3,000. And so my screenshots, you always see it as just the percent. It's a little psychological thing for me. So as my port does grow, I know, mentally, if I take a 30% loss on a trade, you know, it's 3% of less my port. I kind of know what that number is, but like I would rather just stop out and be like, okay, I was wrong in that trade versus looking at something like, man, I'm staring at $800 loss right now. And so just I do a lot of little stuff to help my training psychology because that's like most of you, that's the quickest or the hardest thing to overcome. Um, I don't, I don't I'm aware of my P&L daily and weekly, but I don't have goals and I don't press like, oh, I want to make $500 today. I'm at 475 and I don't force a trade. It is what it is. I take a trade, I learn a trade. Maybe we only get to target one, maybe we get to all three targets. That's fine. And then that trade's done. I'm aware of how much I made each day, but I'm not pressing and forcing. And then River knows I was bitching to him on, I don't know, Monday or Tuesday night. I had a pretty bad Tuesday. I read 5.6% of the port. I was more mad that I told him I overtraded. I averaged down on losers, two strikes right there, two things I usually never do. And it bit me. And it was definitely a wake up experience because I was on a hot run for a while. And it's like, man, I got kicked down for sure this week. So my mindset now is just chipping away. So I'm going smaller sizing. I'm just chipping away at that red to get back until I'm back to, all time high or whatever, the previous high on my portfolio, that is. So I'm just reducing size a lot, actually. But
I like that because everybody always asks, when should I size up? A real question they should be asking is, when should I size down? When do
mm,
I, when should I be getting risk off? And that's what most people will never grasp and why they will always struggle with the market. Because, we all have hot streaks, I mean, I was on one, like, man, I don't know, I think we got like 10 or 11 in a row. And then we went loss, win, loss. and it just sneaks up on you, you know, it just comes out of nowhere. It happens to everybody. And it's when you just have to kind of sit there and say, okay, you know, what was I doing? You know, I mean, we can even, one of my losses today was obviously on Amazon. So to me, I was looking at Amazon, you know, again, looking at these bigger time frames as always. And I started looking left over here. And, you know, I was thinking that these little zones down here, these little bounce zone, you know, your 228, 229 zone seems pretty money. Well, in fact, our 228, 229 zone was not money at all. And we got stopped out, you know, looked good to me. Of course, trend I drew afterwards, you know, looked good to me, but ended up being dead wrong, you know. I gotta believe those things were probably down 50, 60% at the worst today, you know. And so you know, that's just kind of what happens sometimes.
Yep.
What are you
Viral on my watch list, that momentum bullish bearish, that was just an EMA crossover. It's pinned in the Thinkorswim tab or whatever. I don't use it anymore because like I thought it would save me time looking at something going, okay, bullish or bearish, but it's like I can spend the same amount of time and click on the name and just go, oh, the 9 is over the 21. You know, maybe it's bullish, maybe we're trending. So I took it off my trading my watch list just because it, I don't know. I try stuff, and if I use it for a couple of weeks, and if it doesn't give me an edge, I dump it, I get rid of it. And that's one of those things, you know, I just was like, I don't need it to tell me it's bullish or bearish. I'll just look at the chart and go, okay, the 9 is over the 21. And I actually don't use the 21 EMA anymore. And so that's kind of why I dumped it. But if you want it, it should be pinned in that script thing. Um, but yeah, I'm just going through the chat right now. Um,
So I can answer some questions for you, and we can look at NVIDIA too. Why not?
what's up?
Yeah, 1K trades just a few stocks. So NVIDIA, a piece of cake right now. Like, we're
180,
holding
where's it at, right?
we're holding 180. You shouldn't be short anywhere close to 180. If you want to be short, my mention on trade for it was 184.50. I said this is where you try your NVIDIA short. Pretty good, you know. That's where you want to be short. You don't want to be short at the lows. But then again, we come back into market context. This thing has broken a big trend. It's set a big higher low, double bottom, triple bottom, whatever you want to call it, is breaking out. You should be looking long on Nvidia. Don't get me wrong, if you want to try a little short here, your 184.50, stop up to 185.30, great. But you shouldn't be short down here. You know, structures.
Is that your 50, that line?
Yeah. I mean, it worked today. It's only on there because that's from my day trading stuff, you
Right.
know. I
Okay.
mean, I don't know where the SMAs are. Those are what I'd care about more personally, but yeah,
Um,
even right off the 20 today. And so, I mean, if you're going to be short, you want to be short as close to 185 as you can with a tight stop over basically that 185.30 to 186 zone. If we're dipping down to 180, you want to buy the dip. You know, that's where you want to buy the dip, in my opinion.
yep. Yeah, good question on the watch list. It stays the same because again, you guys going back to like I do a lot of little things that helps me. Like everyone's different. I know there's people that trade different stuff every single day, but like to me, you know, Bank of America, Carnival Cruise Lines, Citibank, Delta Airlines, Disney, all that stuff. I always tell people in DMs and trade for. I got a couple banks, I got a couple airlines, a couple cruise lines, a couple techie-ish stuff, kind of DraftKings, PayPal in that sector, um, Uber, Walmart, you know, stuff like that. So I tell people something is moving every single day. If you don't like playing puts and XLF is getting whacked, then it's like, look, what is Starbucks doing? What is Roku doing? But the point of this answer is, or this question is, my charting is done. Like my lines, I always tell people kind of jokingly, but I'm serious on trade for, never delete your lines because it's like it would be so much mental work for me. You know, I'm on the West Coast to get up at 5:45 or 6 a.m. Find something that's hot on Twitter. Like, okay, now I got to chart this out, and I got to see where it's at in the daily, the weekly. Now I got to like wait for market to open, check options flow. Oh, options liquidity shit. I did all that pre-market work for nothing, just so I can't trade this only on shares. So I stick with the same stuff every single day. I log in 30 minutes before the market opens. I scan on a 30-minute or the 1 hour, and I literally go down the list. It's like 15 names. I know you guys aren't looking at my screen now, but I go down, I go, okay, Bank of America, a little bit of consolidation. Don't really want that. Carnival Cruise Line, I've been preaching that this week. 2610 short it every single time. Like um it's just in a range. So I make a mental note and I set some alerts. And on the top part, if it goes off, if we sell under it, get in some puts.
Dude, I
Bottom,
realize it's free money. What is that?
what's that?
Dude, that is a sick one. Dude,
Yeah, go intraday. Go to like the 1 hour, dude. Look at that.
yeah, I'm
It's
just like,
like your
yeah,
top and bottom, it can't be any more defined. Look at that.
yeah. And like just buy it at 25.40 to just sell
And
it
you
at
get your
26.
26 put at the top, and that shit pays, look, 1, 2, 3, 4, 7 days in a row. But people want to chase stuff on Twitter that they know nothing about. They don't know why it's pumping or dumping. It's like I wake up and go, okay, I know where CCL's at. I know where DraftKings at. And again,
Dude, and I bet you that was such a nice
I'm
pick.
not bragging. This is like take some of the weightlifting, you know, off your back, so to speak. Just like the work is done. It's charted out for me. We know our levels, and and that takes 30 minutes out of your day easy, from charting something new and different. So hopefully I answered your
And
question, but like, I don't know. It's
and
so
then
easy
just to
because
give
then,
this sweet example. So like, everybody looks at this and they're like, oh, well, yeah, it dropped 50 cents. Well, that's awesome because you don't understand option Greek. So now we know that because here you go. This little tiny drop, your contract's paid you 50% return. What more do you need?
all day long.
Like, and that's just on a little, cheapy contract. You can buy a few of them. You have tiny risk and you make a 50% return. I mean, you know,
And it's not, and you can even, I mean, you could even buy a next rate contract for
yeah.
probably less than $70, $80. And it's like, it'll still pay, and it's not going to smoke you like, all the other stuff that people want to chase. But, um, yeah, man, I just keep the same stuff on the watch list. I mean, a couple things might switch out. Um, but yeah, good question though.
And I do want to like say something because people always talk about like, oh yeah, 1K small ports. Don't think of these as small
That's
ports.
my fault. I,
That is
I
like,
need to I need to
yeah,
change it to slower movers because of the
oh
tab.
dude, me too. I mean, because I talked for years and to you and everybody talked about tea, Coca-Cola, all these, oh, great for small ports. They're great for everybody. That's what people like,
We
that's what
should
people
just
don't
we should name it
understand.
like low stress.
Yeah, because it's like, it always goes back to position sizing.
And look at
Maybe your
look at
position
look
if
at
your
KO.
position
Look at the
size is
71
500
rejection.
bucks, buy 10 CCLs, that's your position size. Like that's what you do. Maybe you can only buy, two apples, but you can buy 10 CCLs. Same, 50% return, same. It doesn't matter. Position size is position size.
Yep. Yeah,
And
there's a
so
lot of
don't
stuff
ever think of them as
totally
like
range.
small port only, is what I'm trying to say here.
Avenger, how do I find stops and targets? Let me see what I was looking at today, River. You can either do Bank of America or Uber. You pick. I was watching this one, but I was busy. Bank of America on like the 5 or the 15. Um, so I was looking at that. Put a Dirty River trend line on the top for today, if you want, please. So I was looking at this one, but I got some work projects coming in, and then something at like 54.4, I think.
Yeah, 54.40.
Yep.
That's be the
So
spot.
I was looking at that, and so a good example. Can you zoom in just a little more? Just there we go. Yeah, cool. So I was looking at that last green candle before the dump, and I said to myself, yeah, I was going to alert some puts there. I was looking at puts there, and so my stop would for Avenger or anyone else watch would be basically, it'd be a weekly. I'm not a swing trader unless I alert it. So it'd basically be a break over. Is it that 10 a.m. candle and that VWAP? And if you put
Yeah.
the hourly 20, I think it was stacked right there as well. Um,
Hold on, wrong one. Wrong
it's all
one.
right.
There we go. Oh, VWAP, yeah. Oh, and you're entering on like this trend test.
Yeah, and
And your
so
stops
yeah,
are
and short that, and so yeah, just to break over that because I always I tell people, you know, think what market makers want to do. If we're in puts and they reverse on us, where do you think all the stops are at? If they want to stop hunter, stop raid, whatever you guys want to call it, like where is a logical place that people are placing stops at? And so like I think, or I try and think like Big Money or other people, I think, okay, if they break back over that 54.5, we're now back over kind of that cluster range there. and we broke the trend line, we may push to high a day. And so it's like I would never take, puts under 54.4 and tell people, hey, my stop out is high a day. Because it's like you have
No,
all
because
that move that is just like
terrible risk
there's
reward.
there's no reason to keep holding puts if we were to break higher.
No.
And so it's not a super clean chart, but basically if I'm in puts, my stop out would be the most recent. How do I want to say it? When it legs down the most recent retracement,
Yeah. Or
Yeah.
highs. Like, yeah, this low consolidation. You start getting up to this consolidation, you're probably gonna want to be out of there.
Yeah. Because then if you kind of just ignore that downtrend, if it were to break up, it's like, would you be looking for puts there? Well, no, because we're breaking back over. You're looking for calls for a high day breakout, possibly. We know
Or at
that,
least up to a double top, you
yeah.
know?
So
And
it's
then
like
it's like
you,
same plan going downside. I'm assuming you're going to be entering 54.45. Your stop is going to be 54.50 and change, whatever. So you got 5 or 6 cents of risk and you're looking for 30 cents
yep.
down. Like this is
Mhm.
perfect risk reward. And then best case scenario, you're kind of looking for these pre-market lows over here, which ultimately ends up being that bounce spot.
Yep.
And
And I don't know. Um, I use volume profile a lot. I feel like that's kind of slept on. I know Tosi's done like a multi-week lecture on that, and I don't see anybody talk about it. Maybe people use it privately, but I use it a lot, and that's a super good example. That one and one, if you guys remember Ford from a few weeks ago, is basically just a big cluster of volume, and then when it breaks out into a low volume zone, this was the downside. There was a huge volume gap under 54.4 because that quick move this morning on Bank of America, and so you know that if sellers take control and there's no buyers there from that morning move, that move will probably be quicker. And you look at those two 15-minute candles, and those are just kill candles filling that low profile area. And so you guys should definitely go back and read those lectures or watch those lectures on volume profile. They're super, we preach, follow the volume. What's the volume telling us? Well, that is just telling us that intraday volume profile where the activity is that day. And we got that huge pump up in the morning, consolidation, a little bit of retracement, and that big morning move from the open. There was not a lot of transactions there, and we've seen those two kill candles. They filled that zone there, and that's why we've seen that fast move. And so I like volume profile a lot. I just don't leave it always on my chart because it gets a little messy when I post stuff. But
yeah, that's honestly why I like never got behind it. And Thinkorswims kind of sucks.
yeah, the default's gonna be a mess, man.
It's horrible. Look at like what in the world? This is like I can't.
Okay, so what you can do though, so look at that 54.4, and then you see that. So when I say a gap, you see that trough in between down to 54.2. That is where there's not a lot of volume traded in between, basically those two blue lines.
And big volume
Yep.
equals resistance. Like just to put it in really simple terms.
Hmm.
Big volume down here, here is your support.
And look where it
Small
bounced at the end of the day.
and small volume equals not a lot to slow it down if it starts selling.
And
So
that's my
that's
mindset. If they sell it and there's no buyers interested, again, try and think like big money. If no one, is buying that there, it's easy for sellers to take that over, and that's what happened in those moves there. But it's like people want to on the flip side, it's like they want to buy into 54.4 on the bottom side. If we were pushing back up to it, it's like, well, no, look at all that volume stacked there. And I say stuff like, oh, there's too much stuff to chew through. I mentioned that in Uber 2 days ago. I was like, if we don't get this dip now, I don't want it because on the way up, I don't want to chew through an hour of consolidation. I want a quick dip, like you mentioned, probably for scalping too. You want to dip a bounce and we get out,
exactly.
yeah.
Yep. And then just to show you again, because everybody like like sm small ports or whatever. So here's our entry. It's right around 11 o'clock or whatever it is. They're $19. They peaked at 42, so they did about 150%. I mean, I'm doing that math in my head. Um, and that's on a 30-cent drop, 40-cent drop. That's all. These trades are money. I don't care the size of your portfolio. You need to stop thinking in dollar amounts on your position sizes or contract returns and start thinking in percents and start thinking in safety. Something that I teach a lot and 1K teaches a lot too. We want to make as much as we can with as little as we can. So we can buy a few Bank of Americas for $13 and then we can, or $19, and then we can turn around and sell those things, the three of them, after we spend $50, we can turn around and sell them for 130 or whatever it is. Why would you not take that trade versus some high risk Tesla to try to make you $100 or whatever it is? This type of trading is smart trading. It's what I encourage everybody to do it. When people quit trading SPY, QQQ, Tesla, SPX, they start making money. You can come back to SPYs and Qs once you learn more, but trade things like this, trade setups like this, and you will find yourself making a lot more money than you are now.
And I know why people don't want this is because, again, long talks years ago with Tilio and also books I'm reading. It's you guys don't realize it, especially the young guys in here and girls. It's not only are you chasing the SPX gains, you're chasing that dopamine hit, and it's a real thing. And that's why you guys like I can feel it when you guys are getting antsy on trade for looking for stuff and calls here, puts here, this there, this there. It's like you're chasing that fix, and it's like I liked, I get emotional. It happens sometimes, but I never, I never fully go on tilt, so to speak. But it's like I'd like to keep an even kill all day long best I can. Obviously, when I'm trolling on trade floor, I'm probably not in a trade, but like if you don't hear from me for a couple hours or a couple hours in the morning, it's because I'm scoping something out. I'm doing my whole checklist, my trade plan in the morning or whatever it is on a trade. And I'm about to alert something. I'm trying to keep an even kill and not get distracted by whatever's going on the trade floor. You know, we know when to have fun, but like there's a time to be serious too. And it's like I like to just keep a level head in all my trades, win or lose, whatever. I know what my risk is, but it's like the SPX, you guys, it's hurting you. You may not realize it, but it's like because you need that fix every single time, every single day. Yeah, if you're up a lot in the day, risk 50, $60 on SPX in the day, a couple contracts, one contract, but it's like, I'm on the West Coast. It shouldn't be like 6:35 in the morning. People are like, SPX here. It's like, dude, we haven't even filled a 5-minute candle yet. Like, it's just, I don't know. It's just crazy to me, but I don't know. Maybe it's my old age. I don't know, man, but I don't know. That's my trained psychology spiel.
So let's see. Got a couple questions here. So Viral, if your port's green, you're doing your job. That's all that matters, in my opinion. If your port is green, more than it's red, good job. Then you are doing well, and keep doing whatever you are doing. That's the most important thing. Um, you know, yeah, the less money you can use to make money is the most important. But as long as you're just ending green overall, then you're doing it right. If like, and I know you like to swing trade. I also know that you day trade against your positions, and that's why you are so much more casual. Most of these people in here, we swing it, and I'll tell you what, it ain't limited to members. They're just swinging like whole ports of shit, and they're just watching things die, and they're not trading against them. It's like that Pepsi trade you were in. Like this is one like I will always think of you for Pepsi because, oops, not the weekly. We were bullish on Pepsi. And I don't remember where you entered here. We were bullish on Pepsi. It was the most obvious range ever, so you traded a whole bunch. Most people aren't going to do that. Most swing traders are not going to take advantage of what the market hands them. They're going to sit and they're going to whine about a stock going against them as opposed to just trading against the position and financing it. But it all comes down. No matter what, at the end of the day, if you are green, at the end of the day, the end of the week, the end of the month, congratulations. That's all that matters. And I know you are, overall, but I'm saying for everybody, that's what it's all about. One case part is bull flagging.
I took a little dip this week. That's right, though. Now I'm in consolidation phase.
There you go.
Data
Yeah,
or
we
data.
buy dips. Always remember, dude, we're dip buyers. You might have dipped, but we're dip buyers.
I'm
So
not. Yeah, I'm not in VC a whole lot. Data or data. Hopefully, I answer your name correctly. I really only alert like one, maybe two trades a day, and so yeah, it'll be in my tab. I know. I mean, Starbucks, Avenger. Hopefully, he's in here, man. We DM quite a bit, but that really wasn't. I'm not gonna log that Starbucks today, but because it wasn't like, hey, I'm entering here now, even though I pretty much said, you know, break of 87 or 83, whatever it was. But But no, I usually only do like 1 to 3 trades a day. I just, like I said, I have very, very strict trading criteria. Um, and if nothing's hitting it or following it, or lining up, I sit. It's hard. I'm not always perfect, but I just do a lot of sitting and waiting and wait for stuff.
Which is perfect. Which is perfect. I wish people did more sitting and waiting and not buying. Like one of the largest misconceptions people have, or at least like in my mind, terrible mindsets. They think if I'm not in a trade, I'm not making money. Well, if you aren't in a trade, you're also not losing money. And that's what everybody ignores, is that you don't always need to be in a trade. Be boring. Boring is profitable, like, you know, the loudest person in the room is never the one making the most money. Those all caps typers on Twitter that are yelling at people and like getting more bullish the more destroyed they are. And like, that's not real traders. That's not good logic, Be super boring. Let really good trades come to you and you'll be doing better than like everybody else. Overall, I kind of see what you're saying here on Lockheed Martin, and just to touch on this with somebody else because somebody else asked about military stocks. So for me, and in no way, shape, or form do I encourage this because you should basically always keep ethics out of your trading. I personally don't long war stocks and I don't long oil stocks. But looking at this, it's trying, you know. Like I'd be watching this little low down here. It's obviously had a rough little go. I like that little bottom setup. Your major trend is way up. So you do got some room. We could go tag that, 450 zone, something like that. I would have liked it a little bit more buying down here around that 440. It is funny having the volume profile up, seeing that you were buying into a bunch of volume. But I see what you're trying to do here. You can even make an argument for that little breakout right there. But I see what you're doing. Buys around 42, 45. Stops for me would be under that 435. Avenger, those are Thinkorswim app on the phone. It's just so much easier to see what's going on there. Yeah, Brad, for sure. I mean, what do you mean by that? I don't know what you mean. Like learn how to chart or how to like an actual Thinkorswim or Webull or something set up. I know I have a Thinkorswim lecture somewhere. 1K has a Webull one as well. So we do have them recorded somewhere. Yeah, I mean, I talk about my indicators, mine are simple. I have some lectures on indicators and what I use as well. Those are all recorded. There's a lot of recorded lectures from me in 1K around this place, I'll tell you what. Oh yeah, Benji, that's a 1K saying. He uses it all the time. Fives, 15s, things like that. I mean, it works good. It's just like you guys know me. I can't. Oh, dude, like ugly. Oh, it kills me. Like just having to look at it. And I know that I could like mess with my settings or whatever and like make it more like acceptable, but I just like I don't like it being there. It's like Bollinger Bands to me. Did give you a pretty sick dip by right at the old point of control though.
Yeah, it's tough to get used to, but I mean, one could argue you could look at double and triple bottoms and then you turn on volume profile and you're like, well, duh, there's volume stack there,
Yeah.
but intraday it's just really helpful of like, I don't know. I like using intraday a lot.
Yeah, and it's great. I personally don't use volume profile. I highly recommend people do. I mean, some of the not even like joking best traders on the planet, it's a big part of their trading. Like I said, I personally don't really use it or anything. But that guy, he's German. He's so sick. Patrick Nill, I think his name is. I think that's what it is. He is all about volume profile. I mean, and that is, I mean, that he's arguably the best J trader on the planet, at least according to the competitions. The guy has been winning the all trading competitions for like pushing a decade now. I mean, and his whole thing is volume profile. I mean, that's what he's all about. So I always recommend it. So your point of control is it's always going to be labeled. Um, so at least on Thinkorswim, on all of them that I've ever seen, your point of control is always going to be labeled. And it will be very, very obvious where it is. And so we can see right here, I mean, it's not always going to work that perfect, but the point of control lined up exactly to that wick. So that is where real control can shift to the other side. And so it's always going to be labeled. Okay, well, you guys, any more questions? If not, we'll call it now. Get ready for some Friday trading.
Oh, let me send this photo real quick, or let me figure it out real quick. File.
Can we take a quick look at Intel?
But Intel, buy it. What do we need to look at? Buy it. Stay long. I don't even need to tell you. Like, I mean, you stay long on this thing because you have to think. America has a vested interest in this doing well. It's going to do well. Like it's like to me, you don't need technical analysis. You don't need anything on this. Like you look to be a dip buyer on Intel. To me, I was honestly looking at it today after this like just epic knife, wanting it a little bit lower down to this 40, but I'll be getting in there for a long swing at 40 if it shows up. And we can keep selling, but I'll stick with it. Intel is one that I mean, of course you don't chase the highs, never chase the highs. Seeing like a little wedge toppy action here, probably, you know. And didn't quite get up there. That was a nice one though. But you stay long on Intel. I'm not saying again, I'm not saying buy every green candle, but you stay long and strong right there. No questions asked.
I posted my volume profile. It's nothing secret, but I do think I made a couple of tweaks on um, where and how it shows up on your.
Is that Thinkorswim? Dude, send
Yeah.
it to me. I can't see that, dude. Is that a picture for ants?
What is in the chat?
Yeah, dude, DM me that, dude. I can't see that. Yeah, we're all good to have you. Avengers, this is a good enough dip on Intel to start a position in shares? I think so. And then I think you keep buying all the way down if you have to. Like I said, you know, like America has a vested interest in it doing well. It should continue to do well, you know? Like, and that was like one of the sickest things. Like, so you guys all know I'm a huge supporter of the I'm a huge supporter of the CHIPS Act, obviously. We didn't buy Intel shares. We had given Intel a bunch of money from the CHIPS Act that they had no requirement to pay back, but they were kind of, you know, strong-armed a little bit into paying it back by way of shares. So while we did buy those shares, we were also technically given those shares for free, you know, because they weren't supposed to pay back the CHIPS Act money. And so America now has a vested interest in Intel doing well, so you have to believe that we will do our best to send business to them and things like that. And I support it, you know, great. I'm all about it. I'm all about it. But yeah, stay long and strong on Intel, in my opinion.
You
I mean,
check your
it sucks.
DM real quick, River, just so you can post that if someone wants to take a screenshot.
Oh yeah.
I don't
Oh,
think
but
there's a.
dude, but I can't because
Oh my God! We'll take a screenshot of my screenshot, you bonehead.
somebody somebody gave you an inappropriate name. It didn't
Well, who
work.
did that?
I don't know who that was. It's very inappropriate. Did my screenshot of your
No, we
screenshot?
just seen it like grayed out, and then you're probably sharing a window, not the screen.
I don't know what I'm doing. Dude, it's gone. It's gone.
Yeah, you better
Oh,
be
there we
careful.
go.
You and technology.
Oh, dude, I know I'm so bad. Okay, there we go. I don't think it says anything. I don't think we can see the inappropriate part like that.
Yeah, there we go. Yeah, I don't think I can't remember what I changed, but I did a long time ago. But it makes it smaller.
Oh,
And
yeah,
like,
sick. Manny said it to me. That's funny to me. I'm still just laughing at your name.
yeah, good
Nice.
time to
I'm
wrap
gonna do
up.
that because I gotta be honest with you guys. I love volume profile. I think it's such an amazing tool. I highly encourage everybody to use it. It's something that I've never, you know, actively used myself, but it's one of the very few things in trading that I've like, you know, thought a few times. I'm like, it wouldn't hurt, you know, it would make sense. Like it would make sense to buy it or use it. I mean, and so, you know, I highly encourage everybody to use it. Plus, it just gives you, you know, I've spent so much time looking at the lower volume stuff, you know, it gives you a different, unique view, and it gives you a view of volume based on charts, you know, and so, you know, that's great. I think it's a really, really great tool for anybody who wants to use it. Okay, well, that is going to do it. Thank you so much, everybody.
Thanks, guys.
Yep, thank you all, and we will catch you tomorrow. Friday fun day. Let's lose some money together, have some fun. Yep, I know you are, Manny. Okay, everybody, we'll talk to you soon. Thank you, thank you.